Over to Mr. Manik Taneja from JM Financial. Thank you, and over to you, sir.
Thank you, Inba. We would like to welcome everyone to Root Mobile's maiden investor con call post the successful listing recently. The company will be talking about their Q2FY21 performance. We have with us the leadership team from Root Mobile that includes Mr. Rajdeep Gupta, Managing Director and Group CEO, Mr. Gautam Badalia, Chief Strategy Officer, Mr. Suresh Jankar, Chief Financial Officer. I'll now request Rajdeep to provide some brief remarks on the company's performance and future outlook before Gautam walks us through the financial details for Q2FY21 results. Over to you, Rajdeep.
Thanks, Manik. Good evening, everyone. First, I would like to express our gratitude to all the investors who gave such an overwhelming response to our Root Mobile IPO. Your confidence in our business model and the management team's capability fuel us further to drive our business to a newer height. We are relentless in this pursuit, and this is just the beginning of our next phase of evolution for Root Mobile. Q2 has been another quarter for strong performance, backed by better operating leverage despite the trying circumstances. The pandemic has accelerated the CPaaS adoption amongst enterprises, and Root Mobile continues to enable our customers in their digital communication journey. As per Gartner estimate, by 2023, 90% of the global enterprises will leverage API-enabled CPaaS offering to enhance their digital communication and to give a better user experience to their end user, up from 20% in 2020. We are optimally positioned to be at the forefront and drive this transformation. I'm also incredibly proud to highlight that Root Mobile continues to feature as a global CPaaS player in several independent research reports published by agencies including Gartner, Juniper, and Roku. This is just a testament of our 16 years of hard work and dedication of our team in creating a robust global AI-enabled CPaaS platform, which we will drive significant growth for us in the future. Following our mantra of simplifying communication and focusing on solving problems for our customers, we strive to be the preferred partner of choice for various enterprises globally. Across almost all industries verticals, including 9 of the top 20 global technology brands. To sustain this growth and gear up for the future, we continue to hire highly capable individuals across the world who share our passion and vision to integrate them into our highly motivated team. Aside from the strong organic growth, we continue to evaluate potential target opportunities that will fuel our inorganic growth strategy. During the last quarter, we closed the acquisition of key technology-related contract of TeleDNA Communications on a slump sale basis to strengthen our operator side of the portfolio. This deal was closed in a completely virtual environment, and the transition and the integration has happened effectively. We are continuously exploring synergies and value addition through inorganic growth. From the operational perspective, we are continuously improving our internal controls, systems, processes, and governance standards. Now I request Gautam to walk you through the earnings presentation. Over to you, Gautam.
Yeah, thank you, Ravi. Good evening, everyone. I trust all of you are safe and healthy. So I think we've also uploaded a presentation on the exchanges as well as our website. So what I'll do is I'll walk you through the financial highlights and take certain key highlights from the presentation that we've uploaded, and then we'll open up the floor for Q&A. So, as Ravi reiterated, CPaaS business adoption remains robust despite the pandemic. And being a global CPaaS company, our business has been resilient to COVID and has demonstrated very strong momentum and growth trajectory. So with that, I think we'll quickly jump into the quarterly highlights. So in Q2 FY21, our total revenue has grown 76% on a YOY basis from 2014 million to INR 3545 million. EBITDA also kind of grew by 113% on a YOY basis from INR 221 million to INR 470 million. Adjusted PAT grew 135% on a YOY basis from 155 million to 364 million, and there was an expansion on the margins as well. I mean, adjusted PAT margin grew from 7.7% in Q2 FY20 to 10.3% in Q2 FY21. On a half-yearly basis, again, we demonstrated similar growth trajectory. Revenue growth of 54% on a YOY basis from 433 million in H1 FY20 to 668 million in H1 FY21. EBITDA margins improved from 10.6% in H1 FY20 to 13.1% in H1 FY21, depicting high operating leverage of the business. Adjusted PAT margin again grew from 7.2% to 9.9% for the same period, and adjusted PAT grew almost 112% on a YOY basis. In terms of the business, key operating metrics, we continue to kind of keep looking at opportunities. So we have offices in 18 locations. Each of these offices are kind of manned by hunters. The hunters keep hunting for newer clients. We keep adding $1 million client every year. And then we have a key accounts management team, which kind of keeps mining those accounts to kind of help them graduate from $1 million to a $5 to a $10 to a $15 million. And the endeavor is always been to kind of add large global clients into our repertoire. In terms of our recurring revenue, we've demonstrated almost a 60% strong recurring revenue growth and net revenue retention of 139%. So that kind of depicts the quality standards and the kind of deliverability that we kind of offer to clients. And hence we have been able to kind of garner higher wallet share from existing clients. In terms of our geographical revenue mix, there is a slide 12, which kind of depicts why we are kind of a dominant player in emerging markets. We've been clocking supernormal growth rates in most of these countries in the emerging markets, be it in APAC, MEA, or LATAM. So, our focus towards driving growth in this market continues kind of undeterred. And a lot of this is also kind of attributed to the firewall acquisition that we have done. That has really augured well in terms of acting as a catalyst to drive or being a technology partner with the MNOs in emerging markets. In terms of the key snapshot, so both revenue per transaction and EBITDA per transaction continues to inch upwards. That kind of depicts that the business is growing across, not only in India but even internationally. Internationally, the realizations are higher than India, and we've been able to kind of muster a lot of growth with our global international clients. In terms of the ROEs, so we've been able to kind of clock ROEs. So in H1, it was only because of the IPO proceeds that the ROE, which currently has not been deployed yet. So ROE in H1 FY21 is about 24%, but historically we've been doing close to 30% in terms of ROE, and we'll continue to maintain similar sort of a trajectory going forward. The drastic improvement in our business has been on the working capital front. So as you can see, cash flow from operations to EBITDA is almost 145%. So that is the kind of cash the business generates now in terms of free cash. So one important aspect that we kind of always kind of look at into our portfolio when we're looking at the operating leverage of the business, since we function out of multiple geographies and each geography has a different sort of a margin profiling. So we look at EBITDA as a percentage of gross profit to determine the operating leverage of the business, and it was about 49.8% in Q2 FY20, which has inched up to almost 64.2% in Q2 FY21. So this kind of depicts the non-linearity of the platform, and the global scalability of the platform. And we believe, the more global clients that we can keep adding to this operating leverage will only keep improving, even from this 64%. I'll just take another 2 minutes to kind of talk about some of the new client adds that we have done. So we've added about 164 clients in H1FY21, including 2 global Fortune 500 companies. During this pandemic, what we have witnessed from enterprises is, they've started to adopt the next generation of messaging, be it a WhatsApp, Viber. We have seen a lot of use cases where enterprises are kind of increasingly looking at adopting the new age messaging. So that's where we've been able to onboard almost 47 new clients. And on the existing A2P business, which continues to be our cash cow, we have added about 117 clients. Interestingly, because of the acquisition of the TeleDNA key technologies business that we have acquired to Slum Sale, today, the operator side of the business is a comprehensive portfolio. And it now depicts, we're clocking almost 55% gross margin for that business. So, this is completely transitioned into a SaaS business where we own all the IP layers in the messaging stack, which can be offered as solutions to MNOs. So there again, we have seen, so we've kind of bolstered that practice by hiring a new CEO, new COO for that business. And that has kind of transpired into massive traction that we've been able to generate on that. We have been able to win a lot of clients. So we've won one client. We are a preferred bidder for another MNO in the LATAM market. Then we have also submitted 9 odd proposals, out of which 2 we have been kind of graduated to the next level. For the balance at 7, I think the results are awaited. In terms of receivables, again, I would want to highlight, the business, as I said, generates a lot of free cash, receivable cycles and all. The international businesses are generally, in most cases, a negative working capital business for us. On the receivable side, 75% of our receivables are less than 30 days. And only 12% of receivables, or rather 13% of receivables are greater than 90 days. Within which, so these are receivables where, we have a lot of, some of this PSU banking contracts or PSU contracts where the bills are settled on a quarterly basis. So that is essentially the significant part of that bucket. Yeah, so with that, I think we've kind of, in a snapshot, captured, most of the key aspects of the business. Happy to answer any queries that you may have.
Thank you very much, sir. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Any participant who wishes to ask a question may enter star and 1. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We'll take our first question from the line of Dhiresh Pathak from Goldman Sachs. Please go ahead.
Yeah, thank you for the opportunity and congratulations on a very good listing. This segment-related disclosures, the UK shows very high revenues and India shows less. So just can you just explain? I'm sure it's because of the the way the billing is done, but just can you explain that part?
That's correct. So Dhiresh, thanks and hi. The way we conduct our business, for regional companies or kind of geography-specific companies, we have local entities doing the billing. When we are talking about global entities, some of the largest global Fortune 500 companies, most of them, they prefer sort of a jurisdiction like UK for billing. So all the global contracts that we have where we are kind of helping them with our super network, most of those contracts are kind of done in UK. In addition to that, 365 Squared also kind of gets consolidated into UK. So 365 Squared, the entire firewall revenue, which is a very high margin business. So there the entire kind of cash flows and revenues kind of get consolidated into UK. So that is one reason why UK is a significant part of our portfolio.
Okay. And can you also, the billable transactions, I think is mentioned as for the first half as 15 billion. So on an annualized basis, this is running at similar to the 30 billion that we did for the full year last year. So is there going to be an acceleration in the second half? Because I thought there was expectation of volume growth as well, right?
So that's correct, Dinesh. So inherently, I mean, in terms of our portfolio, we have seen H1 H2 ratio pans out to be 45 to 55. 45% in H1 and 55% H2. That's the typical. Notwithstanding that, so Q1 to some extent was impacted because of COVID. So a lot of enterprise clients in markets like India and Middle East were impacted because of COVID. I mean, essentially the clients in travel, hospitality sector. But as things come back to normalcy, I mean, you will see that kind of coming back to normalcy again.
So 1H growth would be how much in the billable transaction, if you have the data in front of you?
So Dhiren, hi, Rajdeep here. So I think the last month, I think we did over 2.75 billion transaction in the month of September. So we are on a track of showing the same kind of a growth what we have shown last year, probably much higher as well. So I think that everything is now coming as normal. And in spite of that, there are certain segments which has a lower volume, but because of international customer volume is increased, and we still have a higher revenue and margins. Gautam, if you can just add.
So, Dinesh, I'll share the data with you. I don't have it offhand for the corresponding period last year.
Yeah, just continuing. So, it will also be useful if going forward you can also share the, it will be small right now, but the share of revenue that you get from non-SMS, that voice, email, another WhatsApp related, another new age messaging, tools.
Sure.
You can share that now if you have it for 1H. Otherwise, going forward in your presentations, you can include, that would be useful. The other question that I had was on this slide 11, where you're talking about net revenue retention of 139. So I've not really understood. So 139%, what does it imply?
So it implies that the clients who were part of, so among the top 150 clients, their contribution in FY20, what was their contribution in H1 FY21 on an annualized basis? What is the retention rate?
So if I put it in other words, top 150 clients, which were 96% of your FY20 revenues, have grown by 39% in 1H. Is that the way to think?
That's correct.
Okay. All right. Thank you so much. Thank you.
Thank you.
Thank you. Our next question is from the line of Varun Goenka from Nippon Mutual Fund. Go ahead.
Yes, good evening. Thank you for taking my question. And since it's the first call, let me extend my hardest congratulations to the entire Route Mobile team. I'm sure it would have been a very hard day's work building the company over the last so many years, and in India specifically, and onboarding such marquee clients. I have two questions. One, a technology company is as good as its people. So what would be our plan on the people front, the R&D side or sales side or development side? That's one. And secondly, again, would be our guesstimate on our existing clients, what could be the organic growth, maybe for the foreseeable 3 years or 5 years, depending upon additional geographies or existing geographies, your estimate of your
Mr. Goenka, I'm sorry, but there were some parts of your question which were not clearly audible.
Okay, I'll just repeat my question.
If you're in hands-free mode, can you switch to a handset mode?
Am I audible now?
Yes, much better, sir.
Okay, I'm sorry for that. So I had two questions. First, on the people side, what is our understanding of the kind of investments we'll do on the R&D team, product development team, or support team? What is the kind of people addition? That's one. And secondly, on our existing clients, what would be our estimate of the organic growth for the next maybe 3-5 years, based on either the existing geographies or additional geographies we are adding to clients? Some insight would help there. And I don't know if my comments were heard, but really heartiest congratulations, Rajdeep ji, Gautam ji. I think it's been a very long journey for you guys. Really welcome to the market. Yeah.
Thanks. I think let me answer the first part, and then Gautam will answer the second part of the question. As you know, Varun, we as a company are completely a tech-savvy company, and we already have over 20 people in our product team, and R&D is going to be our key focus. If you see, I think we have hired over 54 people during the last quarter or H1, and we are now looking out to strengthen our C-level team, and in fact we have identified few people and we are going to announce very soon. In terms of we are looking out more people in our board as well, who can actually contribute. And apart from that, I think we are looking out to hire a senior level management team in different part of the world, including UK, US, and India. Gautam, if you can answer the second question.
Hi, Varun. So we've done some assessment in terms of our existing clients and their net retention rate over the last 2 years, and for H1 as well. I mean, H1 we've done a net retention of about 139%. For the last 2 years, we've done net retention of 120%, 120+%. So we believe it will be anywhere between 20% plus growth. I mean, from the existing clients that will be there. On top of that, we'll keep adding. I mean, the new clients to the portfolio.
Okay. And just ballpark the kind of tenders we have submitted or the pipeline. Would you have any kind of a guess estimate as to the size of the opportunity on this pipeline?
So, Varun, I think some of the pipeline which we're working on right now, I think they are really big and they have a very huge potential. That's what I can share with you all right now. And some of the operator-led solutions which we are bidding right now, I think that those are also very big in terms of firewall contracts in some of the Asian part of the world or maybe Latin America. So yes, in terms of pipeline, I can just only share that there are very huge Fortune 500 companies who are there in our pipeline. But right now we cannot share the name, but yes, we do have a very strong pipeline as of now. Welcome, you can just add.
Sure.
Yeah. That's there.
Yeah. No, thank you so much.
Thank you. Our next question.
Sorry, just to intervene, to address Diresh's point on the number of transactions for the corresponding period in the H1 FY20, we have done 14.1 billion transactions in the same period last year. Yeah, over to you.
Thank you very much. We'll take our next question from the line of Rahul Jain from Credence Wealth. Please go ahead.
Thanks for the opportunity. Congratulations on a good set of numbers. Sir, I have 3 questions. One is with regards to your slide talking about clients more than 15 million and more than 10 million. So we see a addition in terms of FY21 also being there. So number one, are these new customers which have been added to that pie, or has it been the existing customers which have scaled up? If you could share some more details without, of course, naming the client, but if you could share some more details on what has happened over there. And typically, when we are talking about, say, FY21, you have mentioned that 3 clients are somewhere in the band of more than $15 million and 4 clients are now in the band of more than $10 million. So I see an addition of 1 in 15 million bucket and 2 in the 10 million bucket. So how large this kind of customers can be, if you could share some details with regards to this client? That is question number 1. Second is, when you're acquiring new customers, typically, I presume that some of these customers might be already working with some other company. So how does Root approach them, or what is the key point or key strengths where Root is able to get this new deal or take a customer from some other operator? Third, last one on the contract pricing. Sir, if you could share something on how the pricing of each contract is done. Are we into fixed price contracts, or is it variable depending upon volume and scale? And typically when the mobile operators increase their prices, how do we pass it on? Does it happen with some lag or immediate? And is it different on customer side? Like when we are working with some of the large Fortune 500 global clients, does it differ from some of the smaller clients?
Fair enough. Thanks, Rahul. So, I'll address the last question first. So, most of our contracts are pass-through contracts, and it's all on pay-per-use. So, as and when there is an increment in terms of the cost from an MNO, we are able to pass it to the enterprises with some notice period. So that spans between 7 days to about 30 days. And invariably we've seen clients accepting it more often than not. And in cases where we don't see some reluctance, we then stop providing services. So be very clear about. So these are contractually defined, so we kind of adhere to the contracts and expect the clients to also adhere to the contracts, which has happened in the past with all clients that they have adhered to the contracts. Moving to the client bucketing. So as I said, every year, the hunting and the mining work hand in hand. So we have in the 15 million bracket. So some of those clients would be over 20 million as well. So there are new client additions to that bucket, and existing clients continue to grow. So that's how the 18 locations or offices that we have, most of them have hunters, as I said. And then we have a CAM team, which is a key accounts management team. That's either a geographic, so they are based out of certain geographies. Large part of that team is in India. They keep scouting for opportunities within existing clients where they can keep getting higher wallet share. So that is the genesis of the ramp up with existing clients.
So can some of these clients become, say, of $30 to $50 million clients, something in that range?
For some of our competitors, yeah. So for some of our competitors in US, so it is even more than that. So the runway is massive.
Yeah, I think just to answer one more question of yours. Hi, it's Rajdip here. So there's one question about competition you just asked. I'll give a simple example of what is the advantage of being a global CPaaS player and then a local CPaaS player. Suppose I will just give a real-time example of an airline company based out of Middle East, one of the largest in the world. So they were looking out for a vendor who can support them in over 120 countries in terms of termination. So for them, it was very challenging to go to each and every country to have a connectivity with each and every vendors in that part of the world. Instead of that, they were looking out single vendor like Route Mobile who can provide a connectivity for all 120 countries. They have selected Route Mobile, and now we are terminating their messages in 120 countries. That is the biggest advantage we bring on table for all these large global enterprises, and that's why they prefer to work with a global CPaaS player like Route Mobile. In terms of local enterprises, I think the biggest disadvantages they have is like they can provide connectivity only for a particular country. And we as a company have that advantage where we are connected with almost 850 operators globally. And we bring lots of value for enterprise in terms of seamless connectivity throughout the global market.
Sure. So just one more small part. We have been very strong on APAC and Middle East regions. And
Africa as well.
And Africa. So now, do we plan to go to the developed countries, or do we plan to go to US and UK in terms of clients over there?
So we already have a team based out of SFO right now. We already have teams based out of UK and Europe, and we already serving lots of customer based out Fortune 500 customers based out of US. So yes, we do have a plan to increase our sales strength in terms of people in those part of the world, and we are very soon going to hire more sales people in US and Europe.
Sure. Thank you so much, and all the best. Thank you.
Thank you.
Thank you. Our next question is from the line of Ravi Dharamshi from ValueQuest. Please go ahead.
Yeah, hi. Thank you for taking my question, and congratulations on great set of numbers and wonderful listing. My question is more on the competitive advantage and the risks that the model faces. I think yesterday or day before, one of the telco providers in India announced their entry into the space. So what we hear and see everywhere is that the space being under attack from various players. Twilio wanting to enter India, and telco providers also wanting to get a piece of the pie. So just want to understand your thought process on how the space is evolving and how we are going to gear up to stay ahead of the curve.
That's a very interesting question. Thank you for asking this question. First of all, we love to answer this question. And in fact, that operator has endorsed the entire CPaaS model, which we were very openly talking about for a very long time. Now, operators are also endorsing that kind of a model, which is very strong. Now, India itself is $1 billion market as of today, and we do see that is going to be a $2 billion in just 1.5 years. So I think there's a competition, there's a growth for everyone in this space. And somehow, somewhere, there is a lot of partnership also required to work as a global CPaaS player. We see that as an advantage, getting this kind of operator coming in the market, and they will definitely use my connectivity in the global arena. And that I'm very happy to have them as one of the new CPaaS entry companies to enter in this space.
I'm sorry, I didn't understand. You said you're happy to see them because they will be using your platform.
See, there is entire CPaaS model, a global CPaaS model also required lots of partnership. Like so you talk about the company based out of US, if they don't have much of connectivity option available in Africa or Asia or Middle East, so they always work with people like us, and we do support lots of aggregator based out of West. And probably if a company based out of India, they're looking at they want to have some kind of connectivity in Africa and Europe or Middle East. I think I see that opportunity of growth.
And what about competing CPaaS players like Twilio, who have such big developer network, and they are also looking to enter Indian geography?
I love to compete with them, sir. There is a market for everyone, and I will not take anybody's name out here, but I think almost all the companies based out of West, they are partner with Route Mobile, and they are a very strong partner with Route Mobile as of today. And I do see a competition coming to India means that the market is always growing, right? If it is $1 billion now, it's going to be $2 billion next year, 2 years down the line. See, you have to understand one thing very clearly. The mobile adoption and the digital acceleration is going to be multifold in coming months or years. Right now, 35% of the Indian population has a smartphone access, which means that within 2 years, we will have over 70% of this access, which means that more number of digital transactions will be there, and everybody who are there in this space and who are going to have a better quality of services and who are going to have better offering to the end user, I think they will win. And we are very confident about our offering and platform.
Okay. Just last question from my end. So on one hand, the competition is heating up, and on the other hand, the offerings keep getting outdated pretty soon, and newer things keep emerging. So how do we address that? How are we keeping ahead of the curve again over here?
For me, I can talk about Route Mobile very categorically out here. Is like being a tech founder, it is duty of mine to make sure I innovate every month, year down the line, and we as a company partner with almost all the global companies to take care of and to maybe work on RCS, maybe work on WhatsApp, maybe work on Viber and all the other API channels or all over the IP channels which is available in the market. I think it's more about innovation is going to be the key for future, and we as a company need to keep innovating and keep offering new channel of communication to our end user or enterprises so that they can have a better user engagement and customer engagement with their end user. And that's the key for us. Innovation is the key for success, and we all need to keep on innovating.
Thank you. Once again, congratulations and all the best.
Thank you.
Thank you. Our next question is from the line of Dikshit Mittal from Shubhkam Ventures. Please go ahead.
Yeah, hi, sir. Sir, firstly, my question is on this revenue per transaction. So we have seen large jump from 32 paisa to 45 paisa. So is it a function of geography mix or basically offering mix? What has led to this jump? And similar has translated into a bit per transaction also.
So Dikshit, hi. So yeah, largely it's because of the geographic mix. International revenues have increased significantly.
Okay. And if I see the breakup, UK has seen large jump. Any particular reason for that? So I'm assuming that has only led to this jump, right?
So as I said, UK, because most global contracts, is signed from UK. So that's where, because of being a global CPaaS company, we have benefited So we've signed a few global contracts. Existing clients have kind of seen a lot of ramp up in the revenues. So all that kind of has translated into higher revenues in UK.
Okay. And when you mentioned that it's the geography mix that has led to higher revenues, so which geographies are basically more remunerative as compared to other
All the
geographies?
emerging markets, I mean, so that's, I think you have a slide on that as well. So we have shown it.
Okay.
In terms of the geographic mix, I mean, both all APAC, MEA, and LATAM, I mean, we've seen a decent amount of growth, I mean, across all these markets.
Okay. And just to understand, like, just to maintain this pace of growth into next.
Dixit, just to close the loop on that, I mean, so most networks are now increasingly getting firewalled, and we have such solutions being deployed with operators. So once you deploy the firewall solutions, the realizations for that network increases. I mean, so that's where, I mean, in emerging markets, we are seeing the realizations increasing. I mean, so because of the cost of compliance increasing from MNO's front.
Okay. And just to understand the pace of growth, for us to maintain this pace of growth, so this will be led by increase in revenue per transaction, or billable transactions will also see a similar kind of growth?
So billable transactions will also increase. I think Q1 was impacted slightly in terms of the billable transactions from enterprises in India and Middle East, as I said, in certain sectors. As things normalizes, I mean, you will see that coming back, and we'll kind of witness similar growth trajectories that we've done historically.
Okay. And my last question is to Mr. Rajveer. So, sir, just to understand the long-term vision for this company, for example, if we see the current gross margins of around 20%, if we compare to global leaders like Twilio and all, they are making 55-60% of gross margin. So I'm assuming that is because of the difference in offerings that we have. So any plans for us to move into high margin offerings, and what we are doing to add this to our kitty?
So there is a two way to see that. The two synergy we have to working right now. One is very clearly to focus more on a developed market strategy, and we are going to hire more number of people in those markets where we can have a customer with high margin. Apart from that, we are focusing more on new technologies such as voice, Viber, RCS and WhatsApp, where the margins are much higher than 20% as compared to SMS. So I think as the product mix will increase in coming quarter on quarter, I think we will see a much higher margin as well. And I think we're very bullish about our growth story in the US and Europe, which we are working very right now. And I think margins in our US portfolio will definitely increase in next 2 quarters down the line.
Okay, so you mean to say we have a capability to offer those kind of services? It just depends on the demand from customers, right?
Yes, in terms of capability, I think we are serving Fortune 500 customer. I think they're using that platform. So we tick box every boxes in terms of the quality, in terms of platform capabilities, and I think we are one of the largest CPaaS player in Asia right now. As a global CPaaS player, probably I think we, in terms of platform capabilities, there's no doubt about it. What we need is to onboard more number of customers to our platform, so that we can just start serving them. We already have the connectivity in almost everywhere in the world.
Oh, thank you, sir.
Thank you. Our next question is from the line of Anand Gupta from Eastspring Investments. Please go ahead.
Rajveer, hi. Congratulations for good financials. I wanted to request your comments on M&A strategy. What is the progress on M&A so far? If you can talk with Tel, DNA, that 12 crore M&A and the aspirations in the near term.
Thanks, Anand. I think it's a very good question. In fact, as Gautam mentioned, and in my initial remark, I've also mentioned that inorganic growth is definitely going to be our key focus area. And what we are now looking out in few segments, which is like a chatbot-based companies, and we are already in talk with few companies who are really good in chatbot or chatbot platform. Apart from that, we are also in talks with some of the marketing automation based company, and apart from that, the virtual contact center. So I think this segment will add the entire portfolio of communication as combined offering at Route Mobile, and this is a major key area for us to focus on. And I think we already identified few companies in that segment. In terms of closing those acquisition, probably will take a few quarters. But again, we as a company are looking out to have a seamless connectivity and communication offering to end user, where starting from chatbot to marketing automation, including our API-based offering like SMS, WhatsApp, and RCS. In terms of our 365 offering, I think with the 365 acquisition, we have a complete portfolio of operator offering, which includes SMSC, MMSC, network monitoring tools, including firewall. So now we have everything what operator requires, and we directly compete with company like Comviva in that space now. So I think that is one of the one of the big investment in terms of strategic investment, where we wanted to have the entire offering as a our product portfolio. And with this, probably we are now going to contact all the operators where we have a direct partnership with them, and we will try to upsell and cross-sell this kind of product which we have acquired recently.
Thanks. That's helpful. Second and last question is on organic growth. How's the organic growth trend rate, and what are your aspirations there?
So organic growth wise, I think we are always shown a growth over 25% year-on-year basis, and probably I think this year is looking much stronger than what we have achieved in past. And I think we are always going to overachieve our guidance which we have given to all our investors during the IPO roadshows. And in fact, based on the current numbers which we can envisage as of now, I think we are going to overachieve the guidance. Apart from that, I think 2 years down the line or 3 years down the line, if you see organic growth is going to be over 20 to 25% to 30% also, as I don't see any problem in that kind of growth.
Thanks. Best wishes, Rajiv, and to the entire team.
Thank you, Anand. Thank you.
Thank you. Our next question is from the line of Pranav Kshatriya from Edelweiss Securities. Please go ahead.
Hi, thanks for the opportunity and congratulations on the IPO and a good set of numbers. I have a few questions. Firstly, if you look at the growth that is coming largely on the back of increased realizations, what exactly is driving this realization? Is it entirely the mix change, or some of the geographies have seen a tariff increase by the operators, which is driving this growth?
So I think there is two ways to see that. Gautam, you can answer this. Maybe just continue to answer the same question again. But for me, I think there is a lot of people need to understand more about Route Mobile firewall offering as well. Like it is not about Route Mobile does messaging as a solution. We do messaging as one of our offering. Apart from that, we have RCS, we have a WhatsApp, we have rest other offering as well. But out of that, 100% of total bucket of our revenue, 14 to 15% comes from the operator solution. You just think about now, operators are going to enhance their entire infrastructure in coming days to give a better communication or have a better communication offering to their end user. In that scenario, they will definitely need more infrastructure where they require a firewall to monetize the revenue leakages within their network. So I think we do see a potential growth coming from our operator side of the business, which is really growing big as of today. And in coming future also, we do envisage that is going to grow, I think, in a very rapid way. Apart from the local, I think, Gautam, you can answer if they just add on the messaging side.
Yeah. So, hi, Pranav. I think you rightly pointed out, I think revenue per transaction, the increase is there. That's because of, first of all, I think garnering incremental or increased international business. Plus, I think for some of the geographies where we are present, we have seen also realizations. So MNOs have also increased the pricing, and that has kind of resulted in higher operating leverage, which gets translated into a higher EBITDA per transaction. Plus, because of the sheer nature of the business in terms of platform, the operating leverage kicks in. So that's where the EBITDA to gross profit ratio that we were talking about, that has also seen drastic improvement.
Okay. So can you just break down a bit on the firewall business? I mean, how much has been the revenue contribution and the growth for that business for the quarter and first half?
Yeah. So in H1, I think we have done about 38 crores of revenue from the firewall. But now this is completely SaaS sort of an offering where we're doing gross margins as high as 55%. So in terms of margin, I think there will be significant outperformance vis-a-vis, I mean, some of the historical periods that we have kind of performed. So in some cases, I mean, where we kind of there was kind of a pass-through of revenue to third party with the acquisition of TeleDNA. Now we have also kind of plugged that. So in a way, the TeleDNA slum cell acquisition was a backward integration, which kind of rendered 365 squared with a comprehensive stack. So now we own all the IP layers that are required for that stack. So that now it has the potential to even be as high as a 90% gross margin business.
Okay. And my second question will be, on the inorganic. I think partly it has been answered. But I mean, is the focus more on enhancing capability on the existing geographies like Middle East, Africa, and Asia, or you will be looking to go? I mean, geographic expansion is more important, or the capability slash the product offering is more important. How does the management think about it?
So it is a mix of both, but product line expansion will definitely be kind of the most important thing right now. So our internal take is that the future of communication will be culmination of CPaaS with UCaaS. So UCaaS is unified communication along with communication platform. So once both these things kind of can be bundled together, I mean the stickiness with client, and then I mean you can use all the APIs of the CPaaS platform. So that is where we are looking at in terms of the product line expansion. So we're trying to create a very strong and robust platform, which will be a culmination of CPaaS and UCaaS. And in terms of geography, I mean, essentially to enter a new geography, the rationale would be to kind of get access to the clients. So that is the most important thing. So that is what we are kind of focusing on. But in terms of priority, it will be product line expansion followed by geographical expansion.
Okay. Thank you so much. That's it from my side, and all the very best for your future endeavors. Thank you so much.
Thank you.
Thank you. Our next question is from the line of G. Vivek from GS Investments. Please go ahead.
Yes, sir. First of all, congratulations on fantastic set of numbers, and it's really lived up to the expectations, sir. One question I had was regarding the how do we stand versus Willow and Sync abroad? Are we exactly in the same business, because it's a new sector for us? And so can we hope for and aspire for the same sort of valuations in time to come? And what is the growth rate we expect? And what is our USP versus Gupshup and other companies also operating and trying to enter into India market? Thank you very much.
So, okay, Gautam, let me answer this question. So I think when we talk about the global CPaaS player, I think we compete directly with all the companies like Sync and Twilio and their partner in certain region as well. And we do the only, I think, Route Mobile as a company founded in India, and I think these companies, they got advantage of getting startup based out of US and Europe. And I think we have the same kind of platform what they have, and there is no difference at all. If you talk about Cinch and Route Mobile, I think we have the same set of offering what as to our enterprise customer. So there's no question of looking at them as this is what we need to achieve in life. But again, we as a company, we compete very strongly in various markets like Middle East and Europe also. Yeah, I think they are not my aspiration, but they're my competition, and we definitely want to get into their market in coming days, which is like Europe and US, which is a high margin developed market where we definitely want to. If I give a simple example, cost per SMS in Africa probably lesser than cost per SMS or any transaction in the US or Europe. So in terms of if you see the margin of Cinch, probably they are going 20-25% is the same range what we do. Okay, and we do the same number of transactions what they do probably. So this is I think the similarity we have in terms of our platform capabilities. In terms of their customer base is mainly based out of US and Europe, and probably they have a higher margin and higher revenue option available with them. So in coming months or quarters, I think we are looking out to address those markets very strongly, and we would love to hire more number of people, or if possible to acquire some company, in that part of the world to have the higher market share in Europe or US. Gautam, if you can just continue.
Yeah, so just adding to what Rajdeep said. So for most global contracts, that we kind of bid or we are invited by the global enterprises, invariably, we kind of head into, the names that you kind of articulated. In terms of similarity, in terms of portfolio, Cinch would be an apples to apples comparison with Route Mobile in terms of the portfolio stack that we have and what Cinch has. The only differentiator with Twilio would be, Twilio was, or rather Twilio has really excelled on their developer side of the program, right, where they have been able to kind of create a very strong developer community who uses their platform. So they've been able to create a really good platform which is being used by developers, largely from US. We've also kind of started to kind of focus on the developer side of that equation. So we've launched a program called Rapid, last year because of COVID. It took a little bit of a backseat, but that focus is there. We would want to create a similar developer ecosystem in emerging markets where we would open all our APIs for developers to focus on their app or web ecosystem. The endeavor will be to definitely create a similar developer program because it will help you utilize your APIs, which will lead to a significant ramp up of your margins.
Coming to the second part of the question, sir, regarding the Gupshup and the other thing in India, and what is our USP and moat? And the opportunity size also. Yeah, opportunity size also, sir. Yeah.
You're talking about India market or global market?
India and also India, global both. What is our USP, moat, opportunity size, and of course in India, local competition is also there in form of Gupshup and other people also. So how do we stand with?
So I think every country we go, I think we have a local competition as well. Like if I go to UK, if I go to Middle East, or if I go to Dubai, I think every country I work, I think we have this kind of competition, and we compete with them directly in those markets. I think the biggest advantage we bring on table is our super network, which is more than 850 to 900 connectivity, out of which 250 operators are direct connectivity connected to our platform. Apart from that, our firewall offering, which is very unique and we have already deployed this solution with one of the Indian operators as well. And we are doing lots of the revenue monetization for that operator. I think that we have a unique offering for operator along with enterprise. I think that's one of the USP we have as compared to any other domestic aggregator, you can name it. And I think apart from that, the platform plays a very big role in terms of offering a multiple destination to enterprise customer or OTT players. So we serve multiple OTT players, not only for one destination like India. We serve these all large OTT players for multiple countries, into more than 100, more than 50 countries, to all of them. So my revenue for the OTT player is not based only for India market. It is for completely different market, global market as well. So I think that's the biggest difference we bring on table for any OTT player. If they are connected to my platform, they can send messages all across the globe. As compared to any company based out of India, they can only offer Indian termination.
Fantastic, sir. Thank you. Keep up the good work, sir.
Thank you.
Thank you. Our next question is from the line of Suraj Navandar from Prithvi Finmart. Please go ahead.
Hi, sir. Good evening and congratulations on the listing and the very good set of numbers. So my question was on the segmental performance that you have given. So the margins for the India business in the last quarter was 6%. In this quarter, it is 1%. For the Dubai, it was 7%. Now it is 3%. Why there is so much fluctuation in the margins?
So what has happened was, so there was one large global contract, which is one of our largest clients. So they wanted so we had made representations that we wanted because we served them in multiple countries. and to kind of streamline our operations and reduce the forex cost in terms of the transactions happening on a daily basis or a monthly basis, we made representations that we want the invoicing to be moved to UK, because all global companies, they prefer to kind of get the invoicing done from UK. So in Q2FY21, this is one contract that kind of moved from India to UK, and hence what you see is a ramp up in UK's profitability vis-a-vis India.
So going ahead, we can assume that this sort of profitability would sustain in all the geographies, right?
That's correct. That's correct.
Okay. And sir, how big can this IoT can be an opportunity for us? So if you can throw some light on it.
IoT, as per some research, is almost a $27 billion opportunity, right? For one of the clients, we help them with an IoT solution where they kind of keep checking their servers at regular frequency, whether that's functional or not functional through heartbeat testing. So IoT in itself can be a massive opportunity. So it's almost a $27 billion opportunity, and right now we are only scratching the surface.
Okay. Thank you, sir. Thank you very much.
Thank you. We'll take a next question from the line of Jason Soans from Monarch Network. Please go ahead.
Thanks for taking my question, sir. In your presentation, that's your IPO presentation, what I refer to, there's a slide where you mention about this gray routes, and basically acquisition which is 365 squared helps you build a firewall, and you just mentioned that your margins are much better by providing firewall services. But this concept is just not very clear to me. Could you just explain this to me? Just to clarify this concept basically.
Is it better if we can send you the video too, because it will take another 10 to 15 minutes to explain the entire gray route scenario.
Yeah, sure.
Yeah.
Sure. And just one more thing. You did say that you would want to focus on developed markets such as the US and the Europe, right? And I know there's already been a lot of conversation around this, with Twilio and Cinch, etc., being well, established in those markets. So just wanted to understand, when you compete with them in their dominant markets, what can be the differentiation? Is it in terms of service, network, or in terms of cost?
It's a very good question, and thanks for asking this question. And I'd love to answer this question. So First of all, you all need to understand, for all the company or the large OTT player based out of US, the largest market is all the emerging countries, whether it's Africa, whether it's India, or whether it's Asia. Because of the population, more number of digital transaction is possible only for the country who are highly populated, right? First of all, you need to understand that. If I just go to US market and I start offering my connectivity in this part of the world, I have a huge potential of that. I don't need to go and directly sell the domestic customer initially in US market. I will start selling the Africa connectivity. I will start selling the Middle East connectivity. That is a big, and if Twilio is making 54% margin on that kind of customer, even I can sell it 35%. So I have a more opportunity to build from that market than lose anything from there.
Right. Makes a lot of sense. So, for example, I'm saying, so if you take, for example, Netflix, they will be more interested in servicing the emerging market customers because you have a lot of young population, etc., which is growing. Right. Makes sense. Sure. Thanks. That's all from me. Thanks.
Thank you. Our next question is from the line of Keshav L from Angel Broking. Please go ahead.
Thank you for the opportunity. Sir, if I see your last 3-year financials, there is one thing, there is a lot of volatility in the, EBIT margin, which I'm seeing in, let's say, United Kingdom or say Dubai. Can you please explain me the reason for so much volatility in the margin? And secondly, your margin have, quite, came down in the last 4-5 years, although you have delivered what you have said, improving margin, and that is what delivered in this quarter. So is it sustainable, or will we see some sort of deterioration in margin also, because now COVID is over, possibly you might lose 1% of a margin in upcoming quarters?
No, so large part of this margin expansion that you've seen is sustainable. And my only request to all of you will be to kind of evaluate the business on a consolidated basis. So we hold 100% shareholding in all the subsidiaries. So it is a function of the clients that we onboard. Some clients prefer to kind of get invoice from UK. So we have to enter a contract with them from UK. When it comes to domestic enterprises, domestic enterprises, the invoicing happens, so we have to set up a local entity within and secure the necessary licenses to kind of do the billing there. So, for that, there is so we have the number of subsidiaries, in terms of local billing, so when it comes to local enterprises, they are built from the local entities, and when it comes to global enterprises, invariably, our endeavor is even from the client's perspective, they prefer to kind of get the invoicing done from UK. So on a consolidated basis, that's the way to look at it. And we have a transfer pricing, and so there is a charge, because the heart of the company in terms of control systems and processes is based out of Mumbai. So the Indian headquarters levies a sort of a charge, or there is a cost that all the international subsidiaries pays to India in terms of the services that they avail. All this is done at arm's length.
Okay, understood. The quite interesting model and the kind of growth you deliver, it's like quarter on quarter growth is what we look at a company like yours. But if I compare the revenue growth of Q2 FY20 compared to Q1 FY20, surprisingly in Q2 FY20 there was a growth in compared to quarter on quarter like 12 to 13%. So what is the reason for that?
So quarter on quarter growth of 13-14% is very good, right? So I
no degrowth. I'm saying in Q2 FY20 there was a degrowth of 10 to 12%.
No, Q2 FY20. You're asking quarter on quarter or on a YOY basis?
Quarter on quarter, I'm talking. Because I have your H1 FY20 number and I got your Q2 FY20 number. So accordingly, I computed Q1 FY20 number. So your Q1 FY20 revenue is 230 crore and Q2 FY20 revenue is 200 crore. So you got my point. In Q2 FY20, your revenue is less compared to Q1 FY20.
One second.
Can you just refer that PPT file, which Gautam?
I don't think we have it in this. I think you have culled it out from some other source, right? From our DRHPs.
No, what I have done, I have got your first half number and Q2 number.
Okay, I get the context. So in FY19, so you're looking at FY19 versus FY20, right?
So I'm looking at the number of Q1 FY20 and Q2 FY20.
So Q2 usually is the worst quarter out of the 4 quarters, right? Because the entire world goes on vacation. So you have Europe going on vacation, US going on vacation. So in terms of our portfolio, Q3 and Q4 are the best quarters. Q1 is better than Q2. That is how it always kind of pans out.
Okay, understood. I thought there is no seasonality in the business. Okay.
Oh, so H2 versus H1 is almost 55 to 45. So that is the kind of split between H1 and H2.
Okay, understood. One last question from my side. What is the revenue of LADNA in this quarter?
2.5 crores, 2.7.
Okay, thank you. That's it.
Thank you. Our next question is from the line of Amit Mishra, an individual investor. Please go ahead.
Hello.
Yeah, hi.
Hello, am I audible? Yeah, hi. Congratulations on good set of numbers. Most of my questions are already answered. Just wanted to hear more about competition in India. I was also there in the pre-IPO investor conference. I remember that you advised that there is no listed company as a competitor, and in my view there is. We have Tanla Solutions, which I think operates in your segment. So can you just throw some light on what?
Thank you for asking this question.
Indian. Sorry.
Thank you for asking this question. I definitely will answer your question. So first of all, as I said, every market we go, every country we go, we will definitely have a one local competition for that. I gave you an example of one of the largest airline company we are serving in Middle East, and we have been selected by that company because we are able to deliver their messages in over 100 countries. At the same time, we serve all the OTT players, not for only India, but we serve these OTT players all across the globe. Okay, and we have a customer starting from US to New Zealand and Ukraine to South Africa. So that is the kind of base we have. So when you talk about the local competition, listed, all this stuff, see, when we talk about a global CPaaS player, if you refer the Gartner report, if you refer the Juniper report, or if you refer the Roko's report, I think all these reports are easily available over the internet, and you can just see the global CPaaS player landscape over there, and you will come to know who are the actual large players.
Okay, I get you. So you mean that global CPaaS player? Global
so Root Mobile is indeed a global CPaaS player, and we have been now featured in almost all the reports like Juniper or Gartner or Roko's. I think you have to refer those and just find out who are the global players and whom we should get compared.
I understand, but the context was not clear earlier in the presentation.
I hope I'm able to answer your question, and this context has been cleared by various other investors also. So I'll think. Thank you for asking this question.
Thank you. Our next question is from the line of Siddharth Malhotra, an individual investor. Please go ahead.
Hi, can you hear me?
Yes.
Yeah, hi. Yes, firstly, congratulations on a great set of numbers, and thank you for living up to your promise. Going forward, these are still early days, but do you think, looking at the growth guidance that you seem upped it a little bit?
You're breaking, I think, Siddharth. We're not able to hear you.
It looks like his line is disconnected. We'll wait for him to rejoin. In the meanwhile, we'll move to our next question. That's from the line of Sunil Jain from Nirmal Bang. Please go ahead.
Yeah, good evening, sir, and congratulations for good numbers. I got two questions. One is, can you share your percentage of revenue from US or Europe market? And second question is more of a, like you had shared that H1 has a number of transactions 15 billion. So can you split it into Q1 and Q2? Is that possible for you?
Yeah, we have
So I think to just answer your question in a more precise way, I would love to say that I think about 85% of our revenue comes in the US dollar or foreign currency, and I think around 15% is Indian INR currency. If I'm not wrong, correct me, Gautam, if I'm wrong.
So 14% was INR billing and 86% was foreign currency billing.
No, my question not related to the currency part of it. I was looking more from, you had said that your strategy will be now going forward to expand in the developed market like Europe and the US, and you are aggressively trying for that. So I would like to know what is the base right now, how much revenue you are getting from the US customer-centric or Europe customers.
On my initial remark, I think I've already said that we are serving almost 9 out of 20 top tech brands of US, and they are my direct customers. So I think more than 30% of our revenue do comes from US now. Great.
US clients, yeah.
Yeah, US clients, yeah.
Yeah. Okay. Okay. The second question about, if possible, split of.
The volumes were 6.9 billion, 6.95, and Q2 it was 7.8 billion.
Okay.
Again, I just wanted to add something to this. So when you talk about the number of transactions, so I think don't compare Root Mobile with an amount of transaction we do. I'll tell you a simple example of Bangladesh, where we are an exclusive partner with one of the operators over there, and we charge per SMS 6 rupees.
Oh.
Okay. So if you talk about 10 paisa SMS as compared to the 6 rupees one SMS, and you can say how many SMSs you can buy in 6 rupees in India. So I think it is not about when you talk about our revenue, it is not about how much billable transaction we do. It is more about what country and what price we sell. Okay, if you go to the Nigeria market for international traffic, we charge almost 2.5 rupees per SMS.
Oh. Okay. And when you go into US market, it will still be higher than that.
Yeah. I think it's 3 to 4 rupees per transaction.
Okay, fine. Great. I got it. Thank you very much.
Thank you. Our next question is from the line of Deepak Mehta from Mehta Associates. Please go ahead.
Yes. Hello. Yeah. Good evening, and thank you for taking my question and great set of numbers. So my question is around for new RFP. So if you don't mind, can you please answer what is the success rate for new RFP or new deals for our company? Winning success rate.
So, we've been winning RFPs, I think. Recently also we have won few RFPs. I don't know how to kind of answer that. So if you can be a little more specific, what is it that you're looking at? So we've won deals on RFP basis. Not only in India, but even outside India.
So suppose in a year our company participate in 100 RFPs. So what is the success rate for winning that RFP or deal?
So, you'll have to we can touch base on this separately. I don't have this data offhand.
Okay, sure. No problem. And my next and last question is around the competition. So, if we are also into chat and chat platform and all. So, how you see the Haptic as a competition, which is owned by Reliance? So they have huge capital and I think tech backing up. So.
See, the scope or opportunity is massive, right? Every enterprise you go, and any vertical within that enterprise, again, every vertical within that enterprise has a requirement, right? So, the opportunity is massive. It's just that, if you are able to kind of go provide solutions to enterprise, create the chatbot ecosystem, and then kind of couple that with a contact center at the back end, that kind of seals the deal for you. So pretty much, the opportunity is massive. I can just tell you that. And we, as I said, despite the lockdown, we've been able to win 47 clients on the new age messaging piece.
So these 46 clients from across the globe, right, sir?
Yeah. So these are across the globe.
Okay. Thank you so much, sir.
Right.
Thank you, ladies and gentlemen. That was the last question. I now hand the floor back to Mr. Manik Taneja for closing comments. Over to you, sir. Mr. Taneja.
Thank you. Thank you to the leadership team at Route Mobile for providing us an opportunity to host you for the results con call. Thank you once again.
Thanks, Manik. Thank you very much. Thank you, everyone.
Thank you.
Thank you, ladies and gentlemen. On behalf of JM Financial Institutional Securities Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.